You get the offer letter, $75,000 a year. It's a great number. But 2 weeks later, the very first deposit hits your checking account, and the dollar amount is much smaller than you expected. That initial offer is your gross pay. It is the total amount your employer agreed to pay you for the year before a single penny is touched or taxed. What actually lands in your bank account is your net pay, otherwise known as your take-home pay. That big annual number is highly useful when you are negotiating a job offer, but trying to use it to plan your monthly living expenses is where the math quickly breaks down. Before we can look at where the missing money goes, we have to slice that annual salary into individual pay periods. This diagram shows how a $75,000 salary breaks down over a year. Depending on your company's payroll schedule, you might be paid weekly across 52 checks, bi-weekly with 26 checks, semi-monthly with 24, or in 12 large monthly installments. Let's isolate the bi-weekly schedule, which gives us a starting block of $2,884 per paycheck. That is your base gross paycheck, and it is about to get much smaller. To see exactly how much smaller, we have to run this single paycheck through a strict 3-layer funnel of deductions. This flowchart illustrates the exact journey from gross to net pay, starting with the very first layer, pre-tax deductions. These are voluntary elections you make, like health insurance premiums or retirement contributions. They are subtracted from your gross pay before any taxes are calculated, which strategically lowers your total taxable income. For 2026, the IRS lets you set aside up to $4,400 tax-free in an individual health savings account, or $8,750 for a family. Alternatively, you can allocate $3,400 to a healthcare flexible spending account, or shield $24,500 in a 401k. When you see these subtractions on your pay stub, the money is not lost. You are actively buying health coverage and investing in your own future wealth, all while legally minimizing the income the government can tax. Once those pre-tax investments are removed, your remaining paycheck enters the middle layer of the funnel. This smaller balance is the actual number used to calculate your taxes. At the federal level, your check is split to cover 2 primary obligations: federal income tax withholding, which is determined by your tax bracket, and FICA, a flat payroll tax totaling 7.65%. That breaks down into 2 parts. First, 6.2% goes directly to Social Security. For 2026, the IRS caps this tax once you earn past $184,500. The remaining 1.45% funds Medicare. There is no income cap here, and if you earn over $200,000, an additional 0.9% is applied to your checks. These statutory obligations are mandatory, but because they run on set percentages and brackets, you can accurately predict them once your pre-tax layer is dialed in. The money that survives the tax layer drops into the final section of our funnel, post-tax deductions. This is where your employer subtracts funds for after-tax investments, like a Roth 401k, or premiums for supplemental life and disability insurance. What finally exits the bottom of the funnel is your net pay, your true take-home pay. This is the fully cleared, unencumbered money that will actually be deposited into your bank account on payday. The gap between your initial job offer and your actual bank deposit is not a mystery. It is a strictly documented combination of taxes, healthcare, and vital future investments. Understanding this creates a golden rule for personal finance. Gross pay is the metric you use to negotiate your career value and benchmark your earning power in the market. Net pay is the metric you use to actually live your life. When you calculate how much rent you can afford, organize a debt payoff strategy, or size an emergency fund, every single one of those decisions must be anchored entirely to your net monthly income. Tracing the exact path from gross to net strips the anxiety out of payday. It gives you strategic, long-term control over how your wealth is built and where every dollar is going. This video is for educational purposes only and does not constitute financial, tax, or legal advice. Please consult a qualified professional regarding your specific situation.